The Book Essence Podcast, Episode 12, The Basics of Bitcoins and Blockchains, Part 1.
Welcome back, everyone, to the Deep Dive. This time, we're taking a closer look at Bitcoin and blockchain technology. We'll be pulling from Anthony Lewis's book, The Basics of Bitcoins and Blockchains. So get ready to really, go deep on digital currency.
I think a lot of people are curious about this stuff. It's a big topic.
For sure. Before we get into the nitty-gritty of Bitcoin, maybe we should take a step back. What is money?
Well, think about it. Money has three main jobs, right? It's how we exchange things, it stores value, and it gives us a way to measure that value, like a yardstick, but for money.
So how well does the U.S. dollar, stack up to those standards?
I mean, it works pretty well for buying things and measuring value, but as far as storing value?
Not so much.
Yeah, with inflation and all that, it's debatable.
A dollar today doesn't go nearly as far as it did years ago, that's for sure.
That's the point a lot of Bitcoin supporters make. Bitcoin has a fixed supply. Only 21 million will ever exist. So, in theory, it's supposed to be inflation-proof.
Like digital gold. But do people actually use Bitcoin, to buy stuff?
Now, that's an interesting question. Some places do accept it, but it's not widespread. The price is all over the place, which makes it hard to use, as a stable way to measure value.
So more of an investment then, or something people speculate on.
That's the big debate. Some folks think it's the future of money. Others think it's more like, digital gold, just a way to store value.
It's wild to think about how money has changed over time. Didn't we used to just, barter for everything before we had money?
That's actually a common misconception. Bartering probably wasn't as common as we think.
Really?
Yeah. Early societies relied more on credit and debt systems, all based on relationships and trust.
So instead of trading, a chicken for some grain, it would be more like, hey, neighbor, can I borrow some eggs? I'll pay you back with some of my harvest later.
Exactly. It was about building trust and keeping things balanced within the community.
Makes sense. And then eventually we started using actual stuff as money, like gold, silver, even salt.
Right. Those commodities had real value and were kind of hard to come by. Made them perfect for exchanging and storing value.
So how did we go from carrying around gold coins to having, digital money in our bank accounts?
Bit by bit, really. We moved from commodity money to representative money paper backed by gold, and then finally to the fiat currency system we use now.
Fiat currency, that's what the U.S. dollar is, right? It's not backed by gold anymore. So what's it based on then?
Trust, basically. Trust in the government that issues it and, the belief that everyone will keep accepting it as payment.
But what if people lose trust in the government? Could fiat currency just become worthless?
That's definitely a valid concern. And it's one of the reasons people are drawn to Bitcoin. It's decentralized, meaning no one entity controls it.
Yeah.
Unlike fiat currencies, which are, controlled by central banks.
Interesting. Okay, so we talked about how money has evolved. Now, what about how digital money works today? I use my debit card, banking apps all the time. But what's really happening behind the scenes?
It's all about adjusting balances, really. Most digital transactions aren't dealing with physical cash changing hands.
So when I buy my morning coffee with my debit card, my bank's computer is just talking to the coffee shop's bank's computer, and they're updating our balances.
That's basically it. It's all entries in these digital ledgers.
Okay. What about sending money to someone at a different bank? Does that happen instantly?
Well, not always. Banks have their systems for settling those interbank payments, and it's not always immediate. Often involves things like correspondent banking or central bank clearing.
Correspondent banking.
It's like a network of IOUs between banks. The big banks have accounts with each other to make transfers between customers easier.
So my bank says to your bank, hey, we owe you money because our customer sent money to your customer, and then they settle up later.
Yeah, that's the gist of it. And the central bank clearing system works in a similar way. But instead of owing each other directly, they hold reserves at the central bank, which acts like a middleman.
This is making me realize how much we depend on these middlemen, even for the simplest transactions. What about sending money internationally? That's got to be even more complex.
Definitely can be. You're often dealing with multiple banks, different currencies, and systems like SWIFT.
SWIFT? What's that stand for?
Society for Worldwide Interbank Financial Telecommunication. Basically a messaging system that banks use to coordinate international transfers.
Like email for banks.
You got it. It doesn't actually move the money itself, just sends instructions between banks on where the money should go.
So if it's just sending messages, does that mean international transfers are still really slow?
Unfortunately, yeah, SWIFT transfers can take days, even up to a week sometimes, and the fees can be pretty hefty.
Slow, expensive, and not very transparent. Sounds like our current system has some major drawbacks. Is that where Bitcoin is trying to make a difference?
Exactly. Bitcoin cuts out all those intermediaries, allowing for direct peer-to-peer transactions.
Wait, so I could send money directly to someone on the other side of the world, no banks involved? How is that even secure?
That's where cryptography comes in. It's all about securing information. Bitcoin uses it to make sure transactions are safe, verifiable, and can't be tampered with.
Cryptography, huh? Sounds complicated.
It can be, but basically it involves stuff like encryption, which scrambles data to make it unreadable to anyone except the person it's meant for.
Like a secret code.
Exactly.
Yeah.
There's also hashing, which creates these unique digital fingerprints for data to make sure it hasn't been messed with.
So if someone tries to change a transaction, the hash would change, and everyone would know something's up.
Precisely. And finally, there are digital signatures, which are like electronic versions of your handwritten signature, to prove a transaction is legitimate.
So it's like having layers of security to prevent fraud and hacking.
Exactly. These tools are what allow Bitcoin to be secure and trustworthy without relying on traditional middlemen.
Wow, that's pretty amazing. So how does a Bitcoin transaction actually work in practice?
Well, let's say you want to send some Bitcoin to a friend. You'd start the transaction using your Bitcoin wallet. It holds your private key. Think of it like your secret password for authorizing transactions.
Kind of like my online banking login.
Sort of. Once you start the transaction, it gets broadcast to the Bitcoin network that's made up of thousands of computers all over the world called nodes.
What do these nodes do?
They relay the transaction information across the network, like a giant game of telephone, but for Bitcoin.
And how do they know the transaction is legit?
That's where miners come in. They're specialized computers that verify transactions using complex math. Basically, they solve these puzzles to make sure you have the Bitcoin you're sending and that the transaction is valid.
So miners are like the accountants of the Bitcoin network, making sure everything adds up.
That's a good way to put it. Once a miner verifies your transaction, it gets added to a block, which is just a bunch of transactions grouped together, and then that block is added to the blockchain.
Ah, the blockchain. It's like a giant public record of every Bitcoin transaction ever made, right?
You got it. And because it's decentralized and spread across thousands of computers, it's incredibly difficult to mess with. It's like a permanent, transparent history of all Bitcoin activity.
Okay, this is starting to make sense. So we've got this decentralized network, tons of security, and this public record. Sounds like Bitcoin is a pretty radical system. But let's back up a bit. What exactly are cryptocurrencies?
They're basically digital assets that use cryptography for security and operate independently of banks and governments. They exist purely online and rely on blockchain to record transactions.
So Bitcoin is just one type of cryptocurrency. There are others.
Oh yeah, there are tons. Bitcoin was just the first and is still the most well-known and widely used.
Gotcha. So each cryptocurrency has its own unique features and purpose.
For sure. Some are all about privacy, others focus on faster transactions, some even aim to create whole new financial systems.
That's incredible. There's so much innovation happening. But let's stick with Bitcoin for now. What were the main ideas behind its creation?
Bitcoin was designed to solve a lot of the problems we've been talking about with traditional finance. Dependence on big institutions, slow international transfers, high fees, lack of transparency.
Like a digital revolution against the system.
In a way, yeah. It's all about decentralization, fixed supply, resistance to censorship, and borderless transactions.
Break those down for me.
Sure. Decentralization means no one controls Bitcoin. It's run by this network of computers, making it much harder to censor or manipulate. The fixed supply of 21 million Bitcoins prevents inflation, unlike fiat currencies where central banks can print more money whenever they want.
That's a pretty big difference. What about this censorship resistance?
That means no one, not even a government, can block a Bitcoin transaction. Makes it appealing in places where the financial system is shaky or people face strict controls on their money.
I see. And borderless transactions mean I can send Bitcoin anywhere in the world with no restrictions.
Exactly. It's like sending an email. Location doesn't matter.
It's starting to sound pretty appealing. But how does Bitcoin work in the real world? What are people actually using it for?
It has a few main uses. Some see it as an investment, hoping its price will go up. Others use it for online payments or to send money across borders with lower fees. And some view it as a store of value, kind of like digital gold, to protect themselves against inflation and economic uncertainty.
Like a multi-purpose financial tool, then?
You could say that. It's important to remember, though, Bitcoin is still pretty new, and it has some challenges. One big one is scalability. It can only process a limited number of transactions per second compared to those big payment networks like Visa or MasterCard.
So if Bitcoin gets really popular, transaction speeds could slow down and fees could go up.
That's a concern. But developers are working on ways to make Bitcoin more scalable. There's something called the Lightning Network that aims to make transactions faster.
So there's hope for a future where I can buy groceries with Bitcoin without waiting hours for the transaction to go through.
That's the goal. Scalability is one hurdle. But it's amazing how far Bitcoin has come. It's only been around for about a decade, right? That's right. And it's been a wild ride. It all started back in 2008 with a white paper published by the mysterious Satoshi Nakamoto.
Satoshi Nakamoto, that's the legendary creator of Bitcoin, right? But no one actually knows who they are.
It's one of the biggest mysteries in tech. Tons of theories, but Satoshi Nakamoto's true identity is still unknown.
Like a digital Banksy. So what happened after the white paper? How did Bitcoin go from an idea to a real thing?
Well, in 2009, the first block of the Bitcoin blockchain, we call it the Genesis block, was mined.
Mined.
It's a bit complicated, but essentially, miners use powerful computers to solve cryptographic puzzles. The first one to solve the puzzle gets to add a new block to the blockchain and gets rewarded with newly created Bitcoin.
So it's like a digital gold rush where miners are competing to solve puzzles and earn Bitcoin rewards.
That's a good way to think about it. And just like in the California gold rush, those early Bitcoin miners were rewarded handsomely.
I bet they wish they'd held on to all those early Bitcoins. Remember that story about the guy who bought a pizza with Bitcoin years ago?
You're probably thinking of the famous 2010 pizza purchase. Someone bought 2 pizzas for 10,000 Bitcoins. At today's prices, that would be worth millions, maybe even billions of dollars.
Talk about an expensive pizza. It just goes to show how much Bitcoin's price has exploded over the years.
It's been a roller coaster ride, that's for sure.
Yeah.
Incredible price surges, but some major crashes, too. Hit an all-time high of $69,000 in 2021, but also seen its fair share of volatility.
Makes it a risky investment, but also potentially very rewarding. But before we even think about investing, we need to know how to keep our Bitcoin safe.
Absolutely. That's where Bitcoin wallets come in. They're basically digital vaults that store your private keys, which are crucial for accessing your Bitcoin.
So if I lose my private keys, I lose my Bitcoin. No way to get it back.
That's right. It's like losing the key to your safe. Whatever's inside is gone. That's why choosing a secure wallet and keeping those keys safe is so important.
Okay, I'm getting nervous just thinking about it. What kind of wallets are there?
There are 2 main types: software wallets, sometimes called hot wallets, and hardware wallets, also known as cold wallets. Software wallets are convenient because they're online or on your phone, but they're more vulnerable to hackers. Hardware wallets, on the other hand, store your Bitcoin offline, making them much more secure for long-term storage.
So hardware wallets are like Fort Knox for Bitcoin.
That's a great way to put it. They're the gold standard for security in the crypto world.
All right, you've convinced me. Hardware wallet it is. But once I have a wallet, how do I actually get some Bitcoin?
That's where cryptocurrency exchanges come in. These are platforms where you can buy and sell Bitcoin, usually using regular currency like US dollars.
Kind of like the stock market, but for Bitcoin.
You could say that. Some of the big names are Binance, Coinbase, and Kraken.
I've heard of those, but I'm guessing there are other ways to buy Bitcoin too.
Yeah, there are over-the-counter OTC brokers who handle larger transactions and peer-to-peer marketplaces like local Bitcoins, where you can buy directly from other people.
It's amazing how developed this whole ecosystem is. It's like a whole new financial world emerging right in front of us. But before we wrap up this part of our deep dive, I have to ask any updates on the Satoshi Nakamoto mystery.
Even with all the investigations and theories, Satoshi's identity is still a secret. Some people think it was a brilliant solo developer. Others think it was a group of cryptographers. There have even been theories connecting Satoshi to some big names in tech.
It's a real-life mystery, and it seems like it might stay that way for a while.
Well, we've covered a lot in this first part of our deep dive. When we come back, we'll be exploring another fascinating part of the crypto world, Ethereum and its role in smart contracts and the world of decentralized finance.
It's a world full of possibilities, so stay tuned for more. Welcome back to our deep dive into Bitcoin and blockchains.
We've covered a lot of ground already. The history of money, how Bitcoin works, and even that Satoshi Nakamoto mystery. Now let's move on to another big name in crypto, Ethereum.
Ethereum. I hear that name everywhere, but I'm still not quite sure what it is. Or how it's different from Bitcoin, really.
Yeah, I get that. Both are based on blockchain tech, but they have totally different purposes.
Okay, now I'm intrigued. Tell me more.
Think of Bitcoin as digital gold. It's mainly a store of value. Ethereum, on the other hand, it's more like a platform for building things. Decentralized applications, or DApps, using something called smart contracts.
Smart contracts. Is that like some futuristic lawyer stuff?
Not exactly. Smart contracts are like agreements written in code. They automatically do what they're supposed to without needing a middleman.
So instead of relying on a lawyer or a bank, the code itself makes sure everything happens as agreed.
Exactly. Think of it like a vending machine for agreements. You put in the conditions, and boom, the code executes the deal when those conditions are met.
That's a great analogy. So smart contracts could simplify a lot of processes, right? Cut out the middlemen and all their fees?
Absolutely. That's why there's so much hype around decentralized finance, or DeFi.
DeFi. Another one of those buzzwords. To be honest, I have no idea what it means.
It's basically taking those traditional financial services, lending, borrowing, trading, and putting them on a decentralized platform using smart contracts.
So instead of going to a bank for a loan, I could borrow directly from someone else through a DeFi platform.
Exactly. DeFi platforms let people interact directly, cutting out the traditional middlemen and all their fees.
This sounds pretty revolutionary. What are some other ways DeFi is being used?
Well, there are platforms for trading cryptocurrencies without using a centralized exchange, and there are platforms where you can earn interest on your crypto by lending it out.
Wow, DeFi is really shaking things up.
It is, and we haven't even talked about NFTs.
NFTs, those digital art things that we're selling for millions.
That's one example. But they can represent more than just art.
Okay, help me out here. What exactly are NFTs and what makes them so special?
NFT stands for non-fungible token. Fungible basically means interchangeable, like a dollar bill. Non-fungible means unique, one of a kind.
So like the difference between a mass-produced print and an original painting.
Exactly. Each NFT has a unique digital signature, making it one of a kind. They can represent ownership of digital stuff like art, collectibles, music, even virtual real estate.
So when someone buys an NFT, they're buying the digital rights to that item.
Pretty much. NFTs provide a way to verify and track ownership of those digital assets, which has always been tricky.
I'm starting to see why people are interested, even if I don't fully get it yet.
It's a lot to wrap your head around. But the key takeaway is that Ethereum is more than just a cryptocurrency. It's this platform for innovation, enabling a whole ecosystem of stuff like DeFi, NFTs, and more.
It sounds like Ethereum is taking blockchain technology to a whole other level.
It is. But even with all this innovation, there are still some challenges and controversies in the world of crypto.
Oh, I'm sure there's plenty of drama. What kind of challenges?
Well, one big one is scalability. Bitcoin and Ethereum can only handle a certain number of transactions per second, unlike traditional payment networks like Visa or MasterCard.
So it's like a traffic jam on the blockchain.
A good way to think about it, as more people use the network, transactions can get slow and expensive.
That's a problem if crypto wants to be used by everyone.
It is. Developers are working on solutions, though, like Layer 2 scaling tech that aims to increase transaction speeds without compromising security.
So there's hope for a future where I can buy my groceries with Bitcoin and not have to wait forever for it to go through.
That's the hope. Scalability is one thing, but because crypto is decentralized, there's no central authority to make decisions or settle arguments.
So if something goes wrong, who do you call? Ghostbusters.
Huh. That's a funny thought. But really, decisions in the crypto world are often made through community consensus, which can be slow and, well, messy.
I can imagine. And sometimes those disagreements lead to forks, like in the road, or we taking a detour.
Not exactly. In the blockchain world, a fork happens when there's a big disagreement within the community about how the technology should change.
Like a digital family feud.
You could say that. A fork basically creates a split in the blockchain, resulting in two versions of the software, each with its own rules.
Sounds confusing. Can you give me an example?
Sure. One of the most famous forks was with Bitcoin back in 2017. Some developers and miners wanted to increase Bitcoin's block size so transactions would be faster.
Makes sense. Bigger blocks, more transactions per block, less congestion.
Right. But not everyone agreed with the change. Some argued that it would make Bitcoin less decentralized and less secure.
So what happened? Did they have a digital duel or something?
No duels, but the disagreement led to a hard fork, creating a new cryptocurrency called Bitcoin Cash.
So Bitcoin split in two, each going its own way.
That's pretty much what happened. Bitcoin Cash kept Bitcoin's transaction history up to that point, but then followed its own path with bigger block sizes and different rules.
So now there's Bitcoin and Bitcoin Cash. I'm guessing there have been other forks too.
Yeah, it happens more often than you might think, both with Bitcoin and other cryptocurrencies.
Is that a good thing? Are forks healthy for crypto?
It's complicated. There are good arguments on both sides. Some think forks slow down innovation and divide the community. Others see them as a natural part of how decentralized systems evolve.
Survival of the fittest, but in the digital world.
Kind of. Ultimately, a fork only succeeds if enough developers, miners, and users support it.
It's fascinating to see how these crypto communities are shaping the technology through these debates and decisions.
It is, and it really highlights the core of crypto, its decentralized nature.
No presidents or CEOs, just code and community consensus.
That's the idea. Cryptocurrencies are challenging traditional power structures by giving people more control over their money.
That's empowering, but also a little scary. So much freedom and complexity. It's hard to know where to begin or who to trust.
That's why education and critical thinking are so important.
Time for school then.
Don't worry, it's not all lectures and tests. There are tons of resources out there, books, articles, even podcasts like this one, to help you learn about crypto. The key is to be curious, ask questions, and do your research.
I'm feeling a bit overwhelmed, but also pretty excited. It's like a whole new world is opening up.
It is. And while no one can predict the future, one thing's for sure, the world of Bitcoin and blockchain is constantly changing. It's an exciting journey to be a part of, and we've only just scratched the surface.
Speaking of scratching the surface, we've covered a lot of ground here. The basics of blockchain, the details of Ethereum, the whole thing with forks. Maybe it's time to recap the main points of this deep dive and explore what the future might hold for this technology.
Sounds like a plan. Let's dive back in.
Welcome back to the deep dive.
It's been quite a journey, hasn't it? Exploring the world of Bitcoin and blockchain.
We've covered so much ground, from the history of money to the inner workings of Bitcoin, and then Ethereum and those smart contracts.
Even delved into those forks and the whole idea of decentralization. It's pretty revolutionary stuff.
A lot to absorb, but fascinating nonetheless.
Definitely. And all this innovation leads to the big question, right? What's next for Bitcoin, Ethereum, and this whole crypto space?
That's the million-dollar question for sure. I'm really curious to hear your thoughts on that.
Well, predicting the future is tough, especially with something as dynamic as crypto.
True. But we can look at certain trends, right, to get an idea of where things might be heading.
Absolutely. One thing that's clear is the growing institutional adoption of crypto.
You mean like those big companies and institutions are starting to take Bitcoin seriously?
Exactly. We're seeing major corporations, Tesla, MicroStrategy, Square adding Bitcoin to their holdings.
That's a pretty big sign, isn't it? What's driving that interest?
It's a few things. Some see Bitcoin as a hedge against inflation, especially with all the economic uncertainty lately.
Yeah. Bitcoin's fixed supply could be a safe haven, right? When traditional currencies are losing value.
That's the thinking. Others see it as a long-term investment, like digital gold.
So it's becoming a legitimate asset, at least in the eyes of big investors.
It's heading that way, for sure. And then there are those who just believe crypto is the future of finance, period. A complete shift in how things work.
That's a pretty exciting thought.
Yeah.
But are there still obstacles before we see widespread adoption? Everyone using crypto for everything.
Definitely. Scalability is still a challenge. And then there's regulation.
I bet governments are still trying to figure out what to do with this whole crypto thing.
You're right. The regulatory landscape is all over the place. Each country seems to be taking a different approach.
It sounds like a bit of a minefield to navigate.
It can be. But I think eventually we'll see some more clarity and consistency as governments and institutions get a better grasp of how crypto works.
Hopefully those regulations will find a good balance, encourage innovation while protecting people.
That's the ideal, for sure. Sensible regulations could actually be a good thing for the industry, boost confidence, and bring in even more investment.
So regulation could be the key to crypto really taking off.
It might be. But even with good regulation, it's important to remember that there are always risks with crypto.
What kind of risks are we talking about?
Well, the technology is still relatively new. Security is always a concern. We've seen exchanges hacked, people losing their crypto to scams and phishing.
A good reminder to be careful out there and take steps to protect yourself.
Absolutely. And then there's the issue of price volatility. We talked about that earlier. Big swings in the market can be great for speculators, but not so great for businesses trying to use crypto as payment.
Yeah, I imagine it'd be hard to run a business if your prices were constantly fluctuating like that.
It would be, but there are solutions being developed, like stablecoins. They're cryptocurrencies tied to the value of something more stable, like the US dollar.
So stablecoins give you the benefits of crypto without those wild price swings.
Exactly. They could be really important in connecting traditional finance with the world of crypto.
It's amazing how much innovation there is in crypto. It never stops evolving.
I know, it really is. It's like witnessing a whole new financial system being born right before our eyes. So many possibilities.
It reminds me of the early days of the internet. Nobody knew what it would become, but you could feel something big was happening.
That's a great analogy. Crypto's still in those early stages, but it has the potential to be just as revolutionary as the internet.
Well, I think we've reached the end of our deep dive. It's been a really incredible journey.
I've enjoyed exploring this fascinating world with you.
I've learned a ton, and I'm sure our listeners have too. We went from the fundamentals of money and blockchain technology to the potential of Ethereum and the future of crypto as a whole.
We talked about the challenges and the risks, but also the incredible opportunities and innovations driving this whole thing forward.
So as we wrap up, what's the most important thing for our listeners to take away?
I think the key message is this. Crypto is powerful, it's transformative, but it's not a magic solution. It takes careful thought, education, and a healthy dose of skepticism.
Don't invest more than you can afford to lose. Do your research and watch out for scams. Those get-rich-quick schemes are never what they seem.
Wise advice. Remember, this is just the beginning of the crypto journey. The future is still being written, and it's up to all of us to shape it responsibly.
Thank you for joining us on this deep dive into the world of Bitcoin and blockchains. Until next time, keep learning, keep exploring, and stay curious.